Right now, bank holding companies have kind of limited exposure and activities in crypto. When you're looking at it, you're looking at a handful of banks, recently BNY Mellon being the most recent bank to enter crypto custody activities. And those few banks who have gotten permissions from the federal regulators, you're looking at Federal Reserve Board of Governors or FDIC, Office of Comptroller of Currency, permitting certain banks to engage in limited activities like custodying Bitcoin and Ether for institutional clients. Well, there are kind of multiple things that probably need to happen. I think banks will always need to work with their regulators to expand activities, whether it's through a partnership or on their own. But I think some clarity around customer disclosures and making sure that the bank's end customers are getting a quality product is going to be the first hurdle. Institutions like Zero Hash that provide custodial and execution services for customers through licensed platforms is probably the best start. It's unlikely that federal regulators will be authorizing kind of principal activity with retail clients between banks and their retail clients anytime soon. For example, SoFi, a condition of getting its bank charter was that it had to wind down crypto activities within 2 years or 2 or 3 years. You'll see these banks partnering with institutions, and you also see these banks looking for clearer guidelines from their federal regulators. Well, I think there's multiple reasons. One, bank holding companies or financial holding companies might also be registered with the SEC. A majority of them are, I believe. If you have over 2,000 shareholders, you're required to be registered with the SEC. So then Staff Accounting Bulletin 121, for example, is very pertinent to your considerations. And SAB 121 essentially requires that banks hold one-for-one crypto assets on balance sheet, which can really impact their capital position, and I think folks are generally not structured for that type of custody arrangement, whereas companies like Zero Hash are. We've always held one-to-one. Our balance sheet is built for custody of end customers and retail customers, you think there's a part of pulling that crypto activity outside of the banking activity that may give these federal regulators, more comfort that you're not mixing what is perceived to be a more volatile asset and a higher risk industry with banking, which is generally safe, sound, and practices that are supposed to protect fiat dollars. It starts with their regulators. They've the FDIC, FRB, OCC, all of them have put out guidance individually. They've put out some joint guidance. And I believe in January, the joint guidance stated that crypto activities is not generally aligned with safe and sound banking practices. So it's an indication that there will be no approvals relatively soon for engaging in retail activity with crypto. That's one. I think there's also just a reputational risk right now. We've seen a volatile 2022, and most banks have taken either limited their approaches to crypto or have pulled their plans completely. So I think the industry is doing a good job now in 2023 of more legitimizing itself, picking itself up from 2022, and the responsible players are the ones that remain. So I think a little bit of work on our end to build that confidence. I think there have been very slow entries into crypto. I mentioned BNY Mellon earlier. They've kind of taken the approach that if they custody for institutions only, which is sort of their bread and butter, it's the custodial element of their bank. custody securities and other investment assets for institutional investors. So crypto, especially just Bitcoin and Ether, is kind of a natural step for them. When you look at other institutions who have attempted to become chartered, like Custodia Bank, for example, you've seen that those applications have either been rejected or not moved forward. So I think the banking regulators still see strong crypto strategies or crypto-focused strategies as too inherently risky for the banking world or for bank holding companies. So yeah, I think there are a handful of lessons that folks need to pay attention to. Is that there's probably not going to be any expedited movement in crypto for these banks. Yeah, well, companies like Zero Hash and Zero Hash specifically offer not necessarily services to banks. They offer services, with banks and servicing the same customers, but in a different ecosystem. So if a bank end user is using Zero Hash to access crypto services, the bank's balance sheet is not exposed to those crypto activities. The bank is not responsible for custody, and Zero Hash licensed with New York Department of Financial Services and 48 other states as a money transmitter. Has the licensing that's currently needed to engage in those activities in most of the U.S. So I think banks can partner with institutions to offer their customers ultimately a service that they do want, which would enable banks to retain the fiat deposits without exposing their fiat deposits or their safety and soundness to what is perceived to be the higher risk assets. Yeah, there are kind of three things that seem to be moving at once. There's obviously enforcement by the SEC, who stated that most of the crypto assets that exist are securities, and through the enforcement mechanism, it's a long time until there's clarity. The thousands and thousands of crypto assets, theoretically, every single one of them will be tested in court, and we haven't really found out what happens when we go through that full court proceeding. For example, the XRP Ripple case has been going on for years, and I think people hope for a resolution by the end of the year. So imagine that happening 6,000 times. It could take a long time, but luckily there are rulemaking processes that can be used by the SEC and other regulators, and Congress seems to be very active right now. I think Patrick McHenry forecasted a bill within 2 months, and that was a few weeks ago, so we'll call it a month and a half. That's ambitious, but I think Congress can solve this problem relatively quickly, with enforcement being kind of the longer approach. Well, I think if retail customers ultimately want crypto, they're going to find it. And in the U.S., we want to provide safe and sound access, reliable access to these assets, and banks also want to retain deposits in a higher interest rate market. So there's an opportunity for companies that are trusted, that are regulated and supervised, to offer sound crypto services to end customers, and for banks to retain customer deposits, so you're not sending billions of dollars to crypto exchanges around the globe. For these retail customers to engage in crypto, they stay within their safety of kind of an FDIC-insured account over on the bank side, and then allow an institution like Zero Hash to handle only the crypto execution and custody. When you work with these financial institutions like Zero Hash does, you're adjusting your risk profile to theirs. So I think you're adding an extra layer of security by kind of adding a bank or another supervised entity to the customer experience. Yeah, I think obviously they're going to speak with their regulators on their own, so that might be advice not needed by me. But approach your regulators with the story of what you're bringing to customers and why. The crypto service offering that you've determined is best for your business is also best for the end user. I think that you want to be able to establish that Zero Hash itself, or a company like Zero Hash that you're working with, is the proper mechanism to offer those services, because you kind of, as we talked about earlier, remove that risk out of your ecosystem, and you've allowed the crypto company to do what it's best at and maintain those assets for your end customers. And also to just kind of you have to do your own research in all of these endeavors. The crypto ecosystem is vast, so crypto can mean a lot of different things. It can mean buying and selling Bitcoin and Ethereum. It can mean enabling smart contract transactions. It can mean enabling NFTs, or the purchase of NFTs. There are on-chain transactions, and there are not. So really understand the ecosystem and decide which elements you want to make available to the end user. Because a company like us has a broad suite of products, and that may not fit what you ultimately want to make available. When you work with bank holding companies, and when you move out of kind of the state regulated world into the federal regulated world, things move a little bit slower. So I think it's just important for us to know, like, Zero Hash is here for the long haul, and there's no time like the present to start thinking about how to engage in these markets.